Hello everyone and welcome to Strategy Land. In this channel I shared my personal strategies with you which really have 100% win rate. In this video I'll be showing you a simple high win rate Parabolic SAR indicator strategy. So without further ado, let's get on with the video. The Parabolic SAR, or also known as the Parabolic Stop Reverse, is a simple to use trend indicator that does a very good job of providing us with both entry and exit signals. So first, let's apply it onto our chart. So you go to the indicator section, type in Parabolic SAR and click on that says Parabolic SAR. Now through the settings, I prefer to leave it as it is and just use the default settings. And so here, so the needed would look like. Immediately we'll see multiple dots that is positions to either above or below the candle. And then we analyze the market using this indicator is actually very simple. If the dots are positioned below the candle, it indicates that the current market is an uptrend. And the dots are positioned above the candle, it indicates that the current market is in downtrend. The distance between dots and the candle also reflects how strong the trend is. The further it is from the candle, the stronger trend. Let me show you an example. So here we can see the dot is below the candle, indicating that the market is uptrend. Then as that trend starts getting momentum, notice that the distance between the dots and the candle also increases. And after that, the momentum starts getting weaker. The distance between the dots and the candle also becomes narrower. Until finally the dots which is above the candle, indicating the direction of the trend, has no reverse of the downside. Now I'm going to show you the different strategies that you can use with the Parabolic SAR. So first, a common strategy that is often used by beginner traders is they simply take long or short entries based on the position of the dots alone. For example, when the dots switch to below the candle, they take long positions, and when the dot switches to above the candle, they take short positions. Now, despite this being a famous strategy, there are actually a couple of problems if you use the indicator in this way. Firstly, the Parabolic SAR is a trend indicator, meaning it only works on trend markets. Remember, markets aren't always trending. It can also move within a range. And because the Parabolic SAR is constantly showing signals non-stop, it means that it also signals even with the market is trending. Let me show an example. Here we can see that the Parabolic SAR switches below the candle, indicating the market is in uptrend, and according to a strategy we take a long position here. Next we can see that the trend has ended and the market started moving sideways. However, notice that the Parabolic SAR are still displaying entry signals even with the trend has already ended. And as a result, all signals that indicator display on this ranging market ends up in the loss. So in short, the Parabolic SAR works on trending markets. If the market is in the range like this, it will display many false signals. The second problem with using the Parabolic SAR this way is that it doesn't take a long-term trend into consideration. Let me explain. So let's say you enter a short position here because the Parabolic SAR are switches to above the candle. Now if you zoom out and look at the overall chart, you can see the overall market is actually on uptrend. So if you took a short position here based on signals from the Parabolic SAR alone, it means you are actually trading against the overall trend, which is not a good idea. And that is why the solution to this is you need to combine the Parabolic SAR with another indicator that can detect long-term trend. Example that would be the 200 period exponential moving average. So here's the full strategy would work. The first step is you want to identify the long-term trend. And you can do that by looking at the position of the price relative to the 200 EMA. For example, if the price is above the 200 EMA, it indicates that the long-term trend is up. And if the price is below the 200 EMA, it indicates that the long-term trend is down. Now, once you've identified the long-term trend, the next step is you want to wait for the Parabolic SAR to show the same signal as the long-term trend. For example, here we can see that the price is below the 200 EMA, including that the long-term trend is down. This means that we are waiting for a Parabolic SAR to also show bearish momentum by waiting for it to go above the candle. Once this happens, you take a short position. No, it's the same for buy positions as well. Here we can see that the price is above the 200 EMA, indicating that the long-term trend is up. Next, you want to wait for the Parabolic SAR to also show bullish momentum by waiting for it to go below the candle. Once this happens, you take a long position. And so by simply adding the 200 EMA into a strategy, you can now safely trade the Parabolic SAR while making sure that you are still aligned with the long-term trend, no moving around. Besides using the Parabolic SAR as an entry strategy, you can also use it as an exit strategy as well. And one of the most common ways that traders use it as an exit strategy is by simply waiting for the Parabolic SAR to switch positions. Thank you for watching Strategy Land Strategies, and be sure to subscribe and turn on notification because more incredible content is on the way. See you, take care.